Okay, morning traders. Let's see who's in today. So I decided to do this one, the pre-market, just the Hang Seng's actually closed again today, so I wouldn't expect a lot of action. The Nikkei opens at 9:30, so it's just been open for the last 10 minutes or so. So it's worth just having a bit of a look at that before anything kicks off too much. Like I said, I don't expect a lot today. I mean, famous last words, I guess. We got US payrolls are out tonight. Employment data. So they had some last night, which weren't too bad. But there's a bit of economic data that seems to be that it's really starting to hit their recovery. And you've got earnings that are coming out. I think they kick off US earnings in the next couple of weeks, which means I think the expectations are for 21% drop in earnings. Yet the US is notorious to expect, under we'll call it undershoot expectations. And when they sort of, they beat expectations slightly, I mean, they could be down a hell of a lot and still beat expectations, and then the market would be buoyed. Market's still main focus pretty much everywhere. Global markets' main focus is on stimulus. Uh, and like I said, I think I was saying yesterday when we were talking about it in the stream, is that it doesn't have to be stimulus come out. It just has to be talk of getting closer, and that's all they need at the moment because the market's well and truly biased up. It doesn't. They're not looking for for much to trigger some buying. Any excuse is sort of a buying opportunity at the moment. And even when you don't, it seems to be the safe haven is going straight back into tech again, as in last night. So the Dow opened up. We'll just go over that. You can see the Dow, the 30-minute chart. Dow opened here. It gapped up on the open. Tested the previous highs and then drifted all session. Whereas the S&P was buoyed by the Nasdaq. So the S&P sort of opened up and then found some weakness, but it wasn't too bad considering considering what the Dow was doing. So if you look at the Nasdaq pretty much opened up and grind up all day. So it was that safety, or that was, I guess, the sure thing of buying into tech again and keep that ball rolling. So they're looking at some stimulus. So I think coming into the session wasn't too bad, but then there was uh, last night there was talk that they're still poles apart, and we mentioned this the other day. When they could say that they're going to come to some sort of agreement, they could talk it up. And remember, that's Trump's tactics for the trade war. It's just continually saying one thing, buoying it in the markets because he needed those. Like, he wanted to get it done, but he wasn't going to give up on the trade deal. But he'd also, any minor detail about potential progress, bang, he'd be spreading out left, right, and centre and talking it up at the prime times before the market opened to continue to buoy that market. So I think it's a bit of the same sort of action from their group, their side. I don't think he really wants it, to be honest. He doesn't want, $2.2 trillion package to throw at the market, but still, I think they're gonna talk it up to keep the market buoyed into elections. And no one wants to be the one that's, you know, be seen. So neither the Democrats or the Republicans want to be seen as um, what do you call it, being the trigger for no stimulus, if that makes sense. They both want to be seen, and they're both going to claim the victory. Both Democrats and the Republicans, if there is a deal soon, they're both going to claim victory, as you would expect with politicians. Nothing but rubbish comes out of their mouth, in my opinion, anyway. Um, so I think that can continue to kick down the road. Stimulus is going to be the key. US dollar is down on a level. We'll look at that now. The US dollar index, which I think it's had this sell off, but I don't think, we're getting down to the support zone around 93.50. It traded down and reacted off quite a bit. And you can see the chop from last night, this sort of swing up on the open. That was a European Open at 4:30. It took off for no particular reason. It wasn't really getting buoyed. It was on its way down. It just went bang, straight up, straight down, straight up. So it was really a choppy price action. That leads me to believe there's some sort of buyers willing to support it off that 93.50. Now, if that's the case and that holds, we might flush it and bounce. I'm expecting that to start to curve up and hold, and that would work into stimulus getting delayed. I don't think people have got the tolerance to hold if stimulus doesn't come about. Coming into elections, because the elections are still uncertain, we don't really know what another Trump victory means or a Biden victory means to the markets. I think I mean, I don't really know if there's a clean sweep from the Democrats and Biden wins, then that probably means $2.2 trillion, and that would mean equities go up. You know, the ball keeps rolling down the hill. Everything's sweet. But if Trump wins, it might be that he doesn't give the stimulus package the market wants or needs, and then everyone's in sort of a sell-off mode because they're trying to lock away gains. If that starts to get triggered, and there's that idea that we're not going to get the gains, we're not going to get the run we expect, because the only reason this market has been pushing up is not because of fundamentals or the economy. The economy is still rubbish at the moment, really. Um, they're recovering, but they're nowhere near they were pre-crisis. Yet the indices are ahead pre-crisis. Um, they're the S&P is up into new all-time highs. The Nasdaq, the Dow's hovering, breaking into new all-time highs. Probably a little way off, I guess, in saying all that. You know, the highs up here. It's a way off, but you got the S&P, which is it's backed off from the highs, but it's still ahead of where it was. I think I'm pretty sure it is. It's still ahead of where it was uh, prior to the sell-off. So the indices are well and truly factored in. You know, they factored in lower rates for longer. They factored in the stimulus. They factored in pretty much everything. There's not much left, in my opinion, to factor in. Further stimulus, the 2.2, I'd say the market's still factoring that in or has factored that in. So I think anything short of that, I would expect to pressure the markets a bit. So that's probably what both sides are knowing, that they don't want to come to agreement. I mean, I think the Democrats have to back off their 2.2, and the Republicans have to lift, to some meet in the middle, which I don't think is what the markets wants or is expecting. They're sort of expecting, more stimulus to keep supporting the market. Inflation will end up being a problem. So, it's a bit. I think the jobs market, we'll see tonight what happens there. Jobs market's not as it's starting to slow. The unemployment claims are still relatively high. They're not backing off, which means that people are not going back to work. There's still jobs issues, and if we go into further lockdown like Europe, I mean, there's so many reasons why this market really should tip over, but it's just wanting to stay there. And I think the only thing that's keeping there is stimulus until elections. So yeah, and that's why I don't expect them to say anything negative towards stimulus, because that's the sort of thing that the market's hanging its hat on at the moment. Okay, let's get over to we'll just have a look at the markets that we've got our eye on for intraday action. So Hang Seng, like I said, it's closed. That was a close from first yesterday morning. So it's doing nothing. Don't worry about that one. We've got the Dow. I don't know exactly what the Dow is trading at now, but key resistance around 27,916, which I wouldn't expect to be hit today during the session anyway. It looks like it's trying to get supported off this longer term moving average. It, wicked through it, got rejected. It's rejected a couple of times on the 30-minute chart, and it's starting to hold. Doesn't. So what I'm more looking for is maybe a test up to this zone, this inside level, this inside lower high, and then for pressure to come in. It may just start to roll over here. I'm sort of more looking for a rollover and test at 27,510. It's still, that's 100 something points away. We may just get this drift sideways essentially. May keep getting supported off the longer term MA. It may get supported around here. We may lift, come into Europe. But I think Europeans won't be too excited because of the stimulus, that negativity in the stimulus overnight, that come out overnight, where they can't come to terms on anything. I think the market will start factoring in that's not going to happen before elections. So if that's the case, we should expect some downward pressure into the US. But the US is notorious just to ramp. They continue to ramp and then sell off hard once they open. So Europe, I wouldn't expect to be too flash because you got payrolls at 10:30 tonight, Sydney time, Australian Eastern Standard Time. So that's about 12 hours away, I guess, 12 and a half hours away. So I wouldn't expect the market to be too excitable before then. Look at the Nikkei. The Nikkei is where are we? Nikkei is actually, so this is the delayed prices. So it hasn't kicked off yet. But it should have kicked off, I think, the 30-minute chart. But anyway, got resistance at 23,380, which doesn't look like it's going to be a problem. The market's actually trading more near this rising support, this dynamic support line. So if it breaks through there, I'm expecting, if we can get some sort of lower high to play into, once we break down, if we test down to 23,260, I don't want to see it test down and start to lift again. I think this overall structure, longer term, you've got key resistance up here. You've got a potential for this to be key lower high. Sellers are continually coming. Every time it's popped up here, sellers stepped in at 380. It got supported. They tried to get up, sellers stepped in, and now we've got sellers starting to step in at slightly lower prices. So if it starts to break down, which it's right on there, I think from looking at the CFD price, and it's right around this zone here, just these lows, somewhere around 23,280. So it's down from the open. It's just whether or not we bounce and we get a lower high to work into. Okay, so that's pretty much all we'll be looking for. Lower high. I don't expect really anything on the Dow. I don't like trading the Dow as such, unless it's a clean setup. I know when the volatility kicked off previously, when the market was selling off, it was a lot easier, a lot better to trade because it wasn't. You don't think it's getting played with as much. Yet now it seems to be continually supported. If the markets are heading lower hard, the Dow's drifting, but if they go up, the Dow takes off. It's that kind of thing. It's yeah, I mean, there's always opportunities there. It's just I think I want to see a cleaner setup. So on the Nasdaq, we're really just looking for a bit of a lower high to form. I don't want to see it sort of chop and grind back up again, which very well could do. Now the ASX, we're looking at the XJO because I don't have the futures pricing at this stage. So that's just opened a couple of minutes ago. It's actually down from where it closed, so it's going to be down. We've got the pre-open on the index, which is not, I don't think that's a fair pre-open 58.72. I'd expect it to trade down to this support at 58.70. From the overnight action on the futures market ended down, I think our expectation and down about 30 or 40 points or so. No, sorry, 25 to 30 maybe, I think it was. So if that's the case, you've got 25 to 30 below 80. It's around the 50 mark, which is somewhere around here. I wouldn't be surprised if we extend into that support at 58.30. I'd be surprised if people want to hold. You never know with retail, to be honest. You don't know if they're, they're just everything's a buy opportunity to them, or whether this market's going to get knocked about. They're getting a bit nervous, especially if talk of stimulus could be not falling apart, but it's not on the cards like we thought the previous session. So the ASX got smashed down on Wednesday, bounced back quite hard. Well, it rejected yesterday. So it did bounce quite a bit yesterday, but it was rejected into the close. You can see this 59.10. So we've got an inside level holding the action down at 59.10. It's just whether or not it could really plow through. And I don't expect really this level to break. I mean, if it does, it's going to be a big sell-off. If this level sort of breaks and then you bounce straight back and hold lower levels on the ASX, and we look to drift low into the close, there's a chance that we get a big sell-off down this 57.64. But that's a big move. So I'm more expecting this sort of support to hold. This inside support at 58.30 to hold, and we might just get sort of a nothing day, a bit of a chop day, but we'll see how that plays. Just a quick look at crude, and the ones we looked at a lot. Crude oil got smacked down last night, so I think they're concerned about demand with the problems in Europe and the UK with coronavirus lockdowns. Numbers are increasing, so all you can extrapolate from that is further lockdowns. Further lockdowns means the euro should come under pressure, probably safe haven move to the dollar, out of the euro as well, to the US dollar, which mean a move up in the US dollar. If you get too much fear starting to drive that US dollar higher, that's going to be a safe haven. You're going to get gold get hit, even though gold rallied. Gold's starting to edge lower now. If you start to see gold, the US dollar rally, it's not a safe haven. I mean, a lot of people say, don't know why gold is not moving up when the market's moving down, because the US dollar is moving up. So it's a currency play more at the moment. Gold's not a safe haven just at this stage. I mean, I think it's more just this US dollar moving around, whether we get a big influx of more dollars from stimulus to knock it on the head or not. Has the market fact, around the 94 on the dollar index, we've got 93.74 at the moment, around that 94 zone, give or take, or 93.80. Say, okay, let's just make that a bit broader. 93.50 to 80 to 94. In that zone, is that factored in 2.2? What are we factored in? I think the market's always looking ahead, so they're always looking at more stimulus, and that's the reason why it didn't keep breaking down, because I think maybe the last bout of stimulus is coming, and maybe it's not as good as what we expect, which would mean maybe bounce into the US dollar. It may be that the equities cave in because they're finally the ball's stopped, if that makes sense, or the can has been squashed. I just love saying that saying, kicking the can down the road. So maybe that's stopped, which would mean, okay, what does that mean? The equities, they're overvalued, all these sorts of things. We're looking well ahead, and we're probably not getting the same picture as what we thought we were getting which would mean it's going to trigger some sell-off, from profit taking into equities potentially. I mean, there is a chance that it's the only place to get yield from, and it's only really at the moment, as long as the market's relatively okay, as in we're not getting a massive sell-off, we're not getting a big move in the US dollar, as long as they're sort of oscillating between maybe above and below that 94 zone on the dollar, I think equities will continue to be that buying opportunity because it's the only place where you can get some yield. Really, you're not going to put them in bonds at the moment. Bonds is more that safe haven player. So if you see a meltdown in equities, you're going to get a rally into the bonds and a drop in yields, obviously. They're not can't really drop too far. But you're going to get that rally into bonds. You're going to get a rally into safe haven US dollar at the moment. So I think there's more chance of downside. I mean, everyone's probably expecting the same, have been for a while. More chance of downside than upside. The higher we go, the more stretched, in my opinion, we're getting. Maybe we're waiting to get into earnings in a couple of weeks. We want to see what the earnings do. And like I said, there could be some surprises to the upside. There usually is in the US. They usually undershoot expectations to make sure that they overshoot when they deliver, or if they deliver. There's not many times I've seen them well undershoot expectations. So that was crude. Yeah, big sell-off. Like I said, probably an issue there with demand. Even though supply, they can keep cutting supply if they want, cut production. Massive sell-off there, and that was pretty much from the European Open, bang on the dot, 4 o'clock, 4:30. Was heading south, and the way it pierced through this low is quite important. It pierced through the low. It did bounce back. It's around that zone now, so we may get some more chop. We might get a higher low just because of the way it's headed south. The way it got sold off quite hard. There might be some bargain hunting, and we might get a bit of a drift higher. But I think longer term, the trend is starting to roll, starting to head lower, and that would be just purely on back of demand. I think copper was the one interesting one too, because look at that, got absolutely smashed. Now, normally there's been a bid coming into copper because of supply. Supply is still low. I don't think supply is going lower. Don't think supply is going lower. I think if anything, it's sort of on its lows. So whether these higher prices because of supply constraints is already factored in, and that's maybe why you're getting the market kept getting buoyed. Like you can see it every time it's going down, you get this ramp up, and that's from the bulls continually ramping up on the back of supply. Now they're going to run out of steam. I think this move down, and you can probably measure that. This move down from the high to low. If that's the case, and we take it from there, it's pretty much extended there now. So we might get a bit of back and fill, and that's purely because you can get some bargain hunters. No one's going to want to sell it down here. You get anyone that sell it down here is going to be squeezed out. You might get a squeeze, and then see where the seller's coming again. If they come in at a lower level, there's more pressure to come. All right. So we'll see. All right, guys, that's pretty much all I wanted to cover. I just want to see where. So the SPY, like I said, has dropped about 20 points on the open. Let me just see where that close was. It's the problem trying to figure out the CFD prices. There we go. So yeah, it's about 10 to 15 points. It's spiked lower on the open. So maybe it's going to be more than say the 25, 30 points that we expect down on the ASX. But we'll just wait and see. All right, guys. Thanks very much. Have a great weekend. And anyone that wants to join doesn't know about the live stream we don't do a live stream at the live trading room. We'll just chat. Probably not as much today because the Hang Seng's not open. It's my favourite market, really. About 11 o'clock. So if you want to know more about that, send us an email to support@tradesetup.com.au. Yeah, and we'll just get some live trades. So we'll probably just be talking about some more stuff today. We'll see how we go. All right, guys. Cheers, Jason. We'll speak to you soon. Cheers, guys. Bye.